Okay, guys, so this is the summary video of the moving averages. I hope all of the information thus far in this section has proved to be beneficial. Please go back in time, back test, take as many notes as possible as to what I went over, try to make it as clear as possible. Now, I'm just going to go over the different functions. So video one, using the moving averages for using the moving averages in order to filter the trend. Steps on page 171. There is a video coming, also a couple of videos actually, going a little bit deeper on, well, some of my personal routines and so forth in the market each and every day when I'm performing analysis, whether it be late at night for me, 10:30 London time when I'm looking at the daily closure, or in the morning, or maybe even at the start of the week when I'm looking at how the previous week performed and so forth. Now, with that being said, number one, trend filtering. So once you've done the processes and the steps of your monthly levels, your weekly levels, I've tried to give everybody as much help as possible. All of the levels that are actually in the members zone higher up still remain the same today. If there are any major levels that have changed, I will update them on the webinars and post the recordings. So once you've done your monthlies, your weeklies, your dailies, after that, what do? We go in and look at the most recent, let's say the last 3 or 4 higher highs, higher lows. We start on the daily time frame as so. Then if we're struggling on the daily, we can then go into the 4 hour. By that process alone, then we can look at the moving averages to see what they support. Bullish trend, bearish trend, or have we got mixed signals, one's up on the weekly, one's down on the daily, and so on. Now, on most of the currency pairs, actually, recently, the majors that I look at, Aussie dollar, sterling, Euro USD, they're all up at the moment. GJ's down, GA's down, gold's up nicely too. So we are getting some trends in the market that are forming. So with that being said, what we want to do now is just run over a few key pointers. So number one, using the moving averages on the monthly, weekly, daily. Just remember, guys, the daily and the weekly. Let me just pull this box up. Okay, so daily and the weekly, most convenient. Okay, daily and the weekly are the most convenient. If we have a monthly there as well, happy days, is great. But daily and the weekly, we want in the same direction as we have on the euro. But what we also need to understand is that we need to read the higher highs, higher lows. So the only reason I was expecting Euro USD now to pop up higher, well, there's two reasons. Well, three reasons. Number one is that we broke the monthly area of support. Again, it really, really helps when you just narrow your pairs down, live them out day in, day out. Number two, we have the higher highs and higher lows. After this most recent higher low here, a higher high was expected past this, and we got this on the Friday. Very, very happy about that. And it also matched up with the next weekly resistance after the monthly resistance being broken. Remember, guys, there's a 75% chance if we get a clear weekly break and close above a monthly area, our next target is going to be the weekly. Next, we have Fibonacci, and there was a Fibonacci here as well. Check out the last video in the Fibonacci section for this refined fib. Over here, Fibonacci target is saying just shy of 1.2. So we could potentially pop up to that level to fulfill that fib and then rebound. Let's see what happens in the week ahead. So we have to utilize the various tools, the trend, etc., and really just practice this over and over and over again in order to get the confidence and the knowing as to where the Euro USD or any other currency pair is going to go. So because I was expecting that new high there, and we had the fib and we had various levels of support below, and most importantly, a most recent higher low was formed, so a higher high was expected. I was then still remaining firm on the bullish price action and breakout in regards to the weekly matching up with the daily. One second, the weekly matching up with the daily when it comes to the moving averages. So, guys, first use is trend riding. Okay. Secondary, what I went through is the bullish break above and below. So, for instance, the bullish break above and below, we can use it on the trend continuation, i.e. this, and we can also use it on the trend reversal, which I went through in the last video. I'll cover that in a moment, but The break above and below, remember guys that we want to look at the overall trend again, so it does help again to read the overall trend, the moving averages, high highs, high lows, any fib moves. And once we grasp that overall trend direction, that's what it's about. That's why the foundations, especially in the Astro book, are all about reading the trend and being confident as to where the market's going to go next. Then we come in with the entries. So we had a break back above the MAs here. So we came down. This is all consolidation, pullback, messy, choppy. Then we made the higher low here. We came back above. We have that fib region there too, which I've just showed you guys. Higher low was performed, and then we have a break above. A lot of mess here as well. Obviously, because we want to go in the overall trend direction, we don't want to look at these short moves. We do not want to look at these short moves. The MAs are filtering out these, so we can use it as a filter. And then here again, that would have been a nice long opportunity there. Stop 15 to 30 pips or lower this candle, as I mentioned. And then you've just got to be patient, sit on that to the next upside level or target or wherever you've defined it to go. So secondary, we have the break and close above and below, which I did go through. So even here, obviously, we have Euro USD bullish, and it's been bullish for some time. And we're expecting higher prices. Looking at the overall weekly structure, I did mention that if the weekly and the monthly are crossed over, and the market wants to consolidate, it can just come together like this and spaghetti a little. There's your breaker there, Q to go back long and so forth. So we do have that. So we have the trend direction filtering, we have the breakers above and below, and then we have the reversals. And I've mentioned reversal wise, we want to more or less stick to the 4 hour time frame. And what I mean by that is, let's say the market did something like this at this level. It chopped around, or even at that 1.2, it can hit 1.2 because that's our fib extension. Chopped around, something like this on the 4 hour. Then we defined and seen that, okay, cool, let me put a box around this. This is consolidation. Now, again, at this point in time, I know that the MAs on the daily and weekly will still be up, but we know this is a strong level for the market to then reverse. What we can then do and implement is, see the MAs here on the 4 hour, they will come together. And we then combine, this is in the book as well on the moving average section, because any of the other strategies, especially on the 4 hour and the 2 hour time frame, we can utilize the moving average as an extra confluence. So let's say the market broke through. Here we have a nice bearish candlestick. Let me just make a candle out of this. Bearish candle, broke below. And alongside that break now, to assist us in this trend reversal formation, we can have an idea as to where it's going to go here and here. Again, this is not to scale, guys. This is not an accurate representation of the candle. But what we can then do is use the MAs on the 4 hour. Say the MAs crossed over to the downside, so the blue then crosses the red. Let's say something like that. We get the crossover, we say boom, okay, that's a confirmation. Let's go short. You are going against the daily and the weekly. However, we know, and again, once you get more familiar with reading the trend and getting familiar with the levels and getting confident, we know, okay, this is due a pullback now. So we don't always have to just set ourselves to, okay, I want to go in this direction. Obviously, we do want to do that if there's still space for the market to run. However, revert to the 4 hour time frame. For this method in particular, you're looking at consolidation. Sometimes it might just bang its head on there, reverse straight away, and then the MAs cross over. So just always wait for the moving averages to cross over when you are using the 4 hour time frame for a trend reversal. Ultimately, this is going to take some practice. As I said, take as many notes as possible. We are going to be covering this on the webinars more too. And guys, again, it's a very, very powerful technique, especially the breaker above and below, once you've sussed the overall trend direction. What do you need? Just final words of advice: to zoom into the charts. Take your time, zoom in. You know, you can have various screens up as well, but this helps me. I just have 2 screens. I split it into 2. On the right-hand side, I have my monthly, weekly, daily. Then I come into this zone over here where I have the 4 hour, 2 hour, and the 8 hour time frame, which I've been using recently. I'm going to do a whole video on the 8 hour time frame and as to why I use that. But the 8 hour can be very, very beneficial as well for us to use and utilize in the same manner. Okay. So I hope that helps. Moving averages. Feedback, chuck us some feedback in the webinar, or just shoot us a message or an email if there is anything that you're unaware of or unsure of within this section, and I will go through anybody's questions on a fresh video. So new videos, this is a new section. We also have the last video in the Fibonacci section, that's new as well. I'm going to be making the other sections in the next few days about the dollar index and other pointers, tips, and pieces of analysis and routines, and some of my personal inputs and insights into how I operate when I look at the charts day in, day out. So guys, enjoy, get them trades down. Send us some of your trades as well using this technique and strategy. And again, very, very, very simple. If you are trading a break above or below, or even the pin as well. Sorry, I forgot to throw the pin in there. Last but not least, you're always waiting for a spike through the MA and the candle to close above. It's so simple, and that represents continuation. With that, a continuation and the breaker, simply put, the stop loss is going 15 to 30 pips on the opposite side of the candle. So it's not rocket science. It's going to vary obviously, because every candle is going to be a different length. But stick to that rule. My preference is 25, and as I say, you can even use this on some of the intraday charts very well also. So I hope you enjoyed that, and on to the next.